Hello, hello, hello. Welcome to our stock trades. It is a privilege and honor to have you right now, guys. Happy Thursday. I wanted to I don't see or anything as Al talking. I hope you can hear me, William. If you can comment down below. Hello, hello, hello. Can you guys hear me? I see this comment here. Hope you can hear me. Let me double check, look at my audio. Hello, hello. It says that it's working, but hopefully, fingers crossed. Yeah. So a couple things happened. I want to basically share with you guys in regards to. Perfect. You can hear me. Great, great. I'm glad. A couple things happened. You're good now. Perfect, perfect. So I'm going to be going to San Diego right now, and to celebrate kind of extension to relaxing, going to the beach for the all the hard work that we've been doing on the medical side, the licensing exam. We're going to do a take two. But I wanted to something happened today. It's quite amazing. So you know how you're building, you're doing something, right? You're doing something, and you're trying to build something for retail investors. You're trying to build something, and it's by the name of God, trying to do good in this world. So I was in the hospital today, and oh, by the way, Dr. Pro, we're going to be talking about, I see your comment. We're going to be talking about the market right now and what's going on. So this is great. We'll definitely talk about it. And I was, surrounded by a group of physicians, interventional radiologists. They do some procedures. I met a nice physician. He's a contractor. He goes out to other hospitals, and on average, they depends on the hospital. They can pay anywhere between $30,000 to $45,000 for just 1 week of service, or just 7 days. The hospital will pay for that because they desperately need an interventionalist, right? And I was just surrounded by a group of physicians, and one of them was trying to learn how to day trade. I mean, this guy, he's a beast. He's a beast. He's literally, he pulled up day trading just like day trading notes that he's been doing and taking, and yeah, I mean, it's just to see if it just kind of clicked in my head. I'm like, wow, we are on the right path. Here is this individual, 65 years of age, doing what I hope that your future children will have an ability. Not only your future children, you yourself, as we're creating this platform, will have an opportunity to learn the very essence of Wall Street, to understand intrinsic value calculations, to just understand how to read a financial statement, understanding financial literacy. There's a couple things I want to tell you. It's so interesting. It's like, when you're walking God's path and you feel it, that that God has a hand in this, and God is definitely supporting you. The whole point of creating this channel was to share with you the truth, and what we believe is the truth based off of all the research we've done. Is the truth easy to find? No, it's not. Do media outlets want you to know the truth? Absolutely not. Look at 2006 with Jim Cramer talking about how you can use CNBC to echo the lies of hedge funds. And now he runs it. He runs CNBC. Listen, folks, truth is such a very rare commodity that it is more rare than diamonds, right? Finding truth in this world is so difficult that, by understanding the truth, understanding reality, it makes you wealthy. It allows you to understand what you need to do in order to succeed, what stocks to buy, whether stocks are overvalued or undervalued. So seeing this physician, and then showing him what we created. And he's like, oh my God, this is amazing. He ended up going in on Clover, right? And it was great to see. And another thing on the side, we got someone who's interested in investing a big chunk in our stock trades as a angel investor. Now, I personally told him, I said, I need, I'm not interested at the time because personally for me, I don't want to increase prices on the Al stock alerts. I want to keep this at $12. In fact, I want to keep the mastering at this price because I don't want to see it go up, right? I want this to be accessible for retail investors. I want this to be for them and just not, you know what I mean? So when you guys look behind the Discord and the mastering and the website, it's all me, right? And I hired a developer in Netherlands to help me out on on some projects, right? Everything that you see is by the grace of God, right? We put God first in everything we do. The goal of this is, if I can make some of you guys millionaires, if I can get into a position to not me, obviously it's your hard work, but if I can have a small part in that, being able to increase your guys' wealth, that'll give you more time to hopefully spend time with your family. Maybe your family can spend time more at the church, get closer to your creator, right? You know what I mean? Like, have more time to look at the beautiful trees, the ocean, and enjoy the world that you rightfully deserve. Get better healthcare, eat better foods. This is why I'm doing this, right? It feels good. It's just, you know what I mean? So, this world is corrupt. It's a beautiful world, but the people that are in power, that are controlling the narrative, are disgusting. And if you are in power, maybe you would be like them. Maybe if I was that powerful, maybe I would turn into like them. Maybe having a lot of money could be the resort of evil. I hope that will never change. I hope I will never change as I get older in my 50s and 60s, I hope that will never change. So I always keep God first. So, for what we're building, we're putting, God first in everything that we do. Everything that we do is for retail investors to give them something that, I wish I had 10 years ago. A lot of our people that are saying, oh, I wish we had this in 2019, before 2020, right? Yeah. Right. So it's good to see that verification, to know that you're doing the right thing. So, yeah. All right. So let's go ahead. Seems like a lot of people think Clover is overvalued. So in what sense? You have a company that's going to make $3 billion this year. That's trading through at what, $1 billion? What's the market cap? 1.11 billion. So I believe they need to become free cash flow positive. Again, they just got a CFO. They're building out their company. I believe 2024 and 2025 is the year for them. Now, I don't get it why they said 2023 for free cash flow, but we'll see. I think 2024 is going to be good. And then 2025, we're going to get out of this crazy market, bear market, recession, whatever you want to call it. I think 2025 is perfect. And Elon Musk also believes 2025 is great too. Okay. What is a good squeeze? What is good is the squeeze if we are going to, China and Taiwan, that's a big one. And are they going to go in and invade Taiwan? Of course they are. They need the chips. They need those AI chips. Yeah. Wait until Clover becomes profitable a few more months. Yeah, I mean, you hope. Yeah, I mean, 2023 is around the corner. I personally think 2024, 2025. But if they say 2023, then hey, they know their company more than I do. I'm just doing my calculations that are generic, right? Exactly. 2 more years. Yeah. Executive pay is high relative. Yeah. So in terms of what's going on in the market, you just had a release of this consumer. So someone asked Dr. Pro, what's going on with the market? Well, look, very, very simple. We're all screwed. I'm joking. It's like, that cartoon. Everyone run for your lives. Right. No, in all seriousness, the consumer price index, essentially what ended up happening is it came down month over month, right? Was that 8.5, 8.3? But that's all BS, right? It's not really the CPI, it's the CP lie. It's a freaking lying indicator, but we can use it. And the government just keeps going back and forth of whether it wants to what it wants to look at. It looks, before it's like, don't look at energy or food. We can't control that. Just look at the core. Well, the core went up. Okay. Now they're like, it's okay. Look at the energy and look at the food. The food is terrible. Just look at the energy. And what they're doing is they're manipulating the markets by releasing the strategic reserves the United States has that is used for emergency right before the elections. Well, what's going to end up happening is after the elections, they're going to stop releasing these oil reserves and gas is going to go back up. And then with that, the CPI is going to go back up. Okay. So that's kind of the problem that we have with the CPI. Okay. There's one. Okay. Number two, if we go in and take a look at, in terms of what is happening with the market of Dr. Pro's question here, if we go to the core valuation model, we can go ahead and take a look, let's say, at the S&P 500 mean reversion, right? It's a great way to look at it because a lot of folks were buying stocks near its 2 standard deviation high, which is a huge, heavy red overvalued sign. Well, now we're down here first, let me zoom in so you guys can see. Let me not be an a-hole and let me zoom in. Okay. Is that better? So as you can see, it's going back down to this yellow standard deviation bell curve. Now, usually from this history, usually when we cross this yellow, we tend to go through it, right? If you look at the historical drops in the past, right? So in that regards, we could potentially go down to this historic trend line or halfway down here, okay? Now, Michael Burry was hoping for something like this because this was the last time we've had inflation 40-year high. Remember Paul Volcker in the 80s raising interest rates? Well, it happened here. So if you overlay the CPI data on top of this graph here, you will see the CPI was high here and here. So we're expecting it to go down here. And that is a mega crash. Okay. Now, are we going to see this mega crash? Well, I don't know. No one has a crystal ball. But what I can tell you is there are stocks that are overvalued. Apple is over freaking valued. Now, can it go up even higher? Well, of course it can, right? But what's the risk and reward ratio for me? Well, it's not that great, honestly. Every stock has their own intrinsic value line. And you, as the investor, need to determine whether it is above the line or below the line. Okay, let's continue. Let's go ahead and look at margin debt. So, when investors borrow money for stocks and they go on margin, well, during the pandemic in 2020, we had record sales of margin. And then now we're going back down to the 1 standard deviation mean, which means not a lot of people are in margin now. And we're slowly starting to creep back up. Okay, this is good to see. Interest rates. Usually, you don't want to fight the Fed. Interest rates, in terms of, if you look at the 10-year bond, look at here, we were really low during 2010, 2008 because of the crash. And here is 2020, but now we're starting to go back up. This basically, that's why we've had such a great bull market, we were in the green. Now we're starting to enter this area. And my fear is, are we going to get into these 80-like projections where we were above the line, where we had kind of a dead decade? PE ratios. Just look at the price to earnings back in 2021. You remember 2020 when investors were peak stupid, when they were buying stocks at $45 and contributing to the hike. Buy. Tilray is $67. Buy. And people were just insane. And they were buying in the red line of stupidity, right? Okay. So now we're going down to one standard deviation. Again, historical average is what some investors are waiting for. Is it going to get there? I don't know. Buffett indicator. Now, this one's a good one. I like this one. In fact, where we recreated this Buffett indicator by taking a look here. If you click here, we have a Buffett indicator graph that we calculated ourselves. And all we got to do is just take the Wilshire 5,000 full cap index divided by the gross domestic product multiplied by 100. That's pretty much the calculation for the Buffett indicator. And you would essentially, you started to see we are trending down to the mean. You see this drop in mean reversion? Okay. So let's go back to the core valuation model. Okay, let's go back to here. So, sorry, the Buffett indicator. So we could be tracking a little bit more down on that, right? But on average, we always transcend back down to this historic average mean. This one's my favorite because it includes the GDP, which Dr. Michael Burry looks at. Yield curve. Now, when short-term 3-month Treasury yields are higher than the long-term 10-year yields, it is bearish signal that is almost always followed by an economic recession, aka when the 10-year minus the 2-year, or in this case, the 3-month, when we start to do that and this number gets to a point where it's negative, get an inversion of the yield curve. Here's the inversion. Remember I said an inverted yield curve? We start to get a recession. Now, is this true? Is this a real economic indicator? Is this a scam? Is this fake? No, the answer is no. But let me explain. So you remember 2000? How it was high? We got an inversion of the yield curve. Mark Cuban, Elon Musk, Peter Thiel, they all got out of the market while a bunch of dumbass millionaires didn't know diddly squat about the stock market. They held and they lost their shit, right? Then again, all of a sudden, housing market. Again, we got a inverted yield curve. A lot of the poor people continued to buy, and then they lost their shirts. And then Warren Buffett won and literally stole so much. I wouldn't say stole, but bought everything. But you know what? No, I love Warren Buffett. You've taught me a lot. But you knew about this economic recession before it happened because the Secretary of Treasury called you and asked you, what do we do? And you knew exactly what to do. And you knew exactly what the government was going to do. Okay? You knew exactly what, and guess what? You've made billions of dollars off of the backs of the American people. And no one basically talks about it. Why? Because of all the great donations you've made with the Bill Gates Foundation and all this stuff. Okay? Again, we are making this channel to speak the truth and to teach you how dirty Wall Street is. Guess what, ladies and gentlemen? We had an inversion of the yield curve in 2019. And then we had a forced recession. But guess what? We're getting back. And now we're inverted, we're technically inverted on the 10-year minus the 2 and close to the 10-year minus the federal funds rate, and not so much for the 10-year minus the 3-month of the short-term Treasury yield bond. Let's go to our recession sniper. We had a person talking about here, recession sniper. Again, I put this graph together. I like to look at the 30-year, the 10-year, the 5-year, and the 2-year. You see this gray line here? Oop, you see these gray lines here? These are recessions. Shaded areas indicate a U.S. recession. Every time you see the lines form into a bullet, it's called a sniper. And it goes and it attacks the heart and soul of the United States. And that is called a recession. And a recession, when it does, it resets the economic form. and it fans out the economy and makes things normal again. Where the 30-year is paying more than the 10-year, which is paying more than the 5-year, which is paying more than the 2-year. And you can see this based off of the numbers. But ladies and gentlemen, look what we're having now. We're having a bunch up, a sniper effect in full motion coming together, right? Where the 2-year is more than the 10-year or the 30-year. Read it. Can't you see? Let's zoom in. Read it. The 2-year is paying 3.56 and the 30-year is paying 3.47. Does that make sense to you, ladies and gentlemen? Does it make sense a 2-year bond is paying more than a 30-year bond? That is absolute bananas. But most folks don't know this. All right. The question is, do we buy? Do we sell? Do we just give up? Do we just say, you know what? The stock market's not for me. I'm just going to go in and just give up. I don't know. Just give up. The answer is no, stupid. No. Okay. The answer is no. Okay. You work hard and you learn. The best times to buy is when everyone's effing fearful. Okay. That is when the best time is to buy. Okay. You remember that time during January 2021? I went to a freaking party and I had people telling me, oh, you don't know about this company. People telling me, you don't know nothing about this company. This is a different company. This is the future. Cryptocurrency is going to change this world. The blockchain technology is, I don't know about that crypto coin, but blockchain is going to take, blockchain is great. A lot of banks are adopting blockchain. I think some hospitals are applying blockchain now too. Listen, whenever you start seeing people at a cocktail party act like they're stock pickers, that's when you know you're in a bubble. Okay? But now where is everybody? Everyone's quiet. Everyone's putting their head down. The stock market is a gamble. The stock market is X, Y, and Z. Ladies and gentlemen, this is a time to go in and look at your intrinsic values to determine what is the price of the stock and double down. Okay? This is the time, right? And I'm not talking about Apple. God, no. I mean, look at Apple's price. I mean, let's look. Let's go ahead and take a look at Apple's price. I made a post. Let's look at our long-term price targets. In long APL, there it is. On January 28th of 2022, I made a post about Apple, and I said it is a hold. Apple is another darling for investors as it is a safe stock. Many analysts tend to do revenue multiple analysis rather than intrinsic value calculation. If you are a holder of the company, you don't sell only if the fundamentals have changed. Okay? These are my technically price targets that I will jump in on Apple. Now, this was January 28th. Let's go ahead and take a look at Apple. January 28th, right here. Apple's here, 170. And now Apple's down 10%. And during this one here, it was down 23%. This is where the intrinsic value calculations win. I don't really see an upside relative to the downside risk. Enphase did well. All the oil stocks we picked did well. A couple of technology stocks that we picked did well. I'm not saying all the picks are doing well, but you do the intrinsic value calculation and then you wait for the company to ascend to its intrinsic value. Now, another one I want to look at is Shopify. There's a lot of change with that company. It almost is acting like a Peloton. We got to go ahead and look at it and investigate it, right? But overall, Max Payne on S&P. So yeah. So Max Payne, let's look at Max Payne. So Max Payne, let's open that up here. Let's do Max Payne here. So Max Payne. And then what was it? QQQ. Yeah. NASDAQ, right? 310. See, Max Payne. We get Max Payne here. It helps. 310. Around that. Okay. So let me give you an example. Yesterday, I don't know if you saw the bullseye. If you go down here to our bullseye, where the hell is it? Here. And you go into in bullseye. Oh, hello. In bullseye. You guys see it? When you hit the snow, uh, we had snow yesterday at 8:15 and 8:15 yesterday. If you would have taken that bullseye, look at your success rate. You would have got a max profit of 192%. You feel me? All directly here. And let's look at the stock. Let's just say you didn't want to do the options. You're not an options person. Look at that. It was 8 something, or what is it? Right around here. You would have been up 8% if you would have done it right there. As of close, 5%. See how powerful the AI is? And using this confidence level and doing your technicals and your intrinsic value calculation, because you know Snow is a great company, right? So in any case, unfortunately, we live in a world where they don't want you wealthy. They don't want you to have power. I mean, think about it. All of a sudden, in 2020, the Federal Reserve were buying up stocks. And then as soon as the market crashes, then they make a law saying, oh, you know what? Fed people can't trade stocks anymore. Give me a break. Give me a break. Okay. Let's see. My recent price target. Again, log into alstocktrades.com and open up the intrinsic value calculation and redo it and look at it yourself. But right now, for me, as of I lowered my price target to $25, and that was from a recent video. I want to see next year, can they beat their revenue for this year? And what is their revenue beat going to be? I think it's going to be 35%. If it's more, then I will recalculate. Okay? Other than that, that is pretty much all I have to say. It's really great to to have an offer for an angel investor to come in and support our mission. It feels good. It knows that it makes me well aware that we're doing God's work and we're doing it correctly. Okay. And I'm going to make it my commitment to keep our stock alerts below $12. I'm going to make it my goal, right? I want to make it my goal to keep it this low. So we can just be able to teach so many people and be able to teach them a different way to invest. Okay. A different way. So, when you put God first in everything you do, you achieve amazing things. Everything we do is by the grace of God. Everything we do. So it's always a privilege and honor. So it's good. Hey, Jake. Going on, man? You are the best doc. I appreciate that, man. Clinicals are doing great. I have so many stories. I don't even know where to start. Helping patients. There's no greater calling, dude. I mean, whoever's young watching this, if you don't go into medicine, you're missing out. You're missing out. it is the best field ever. Like when you're in that room listening to your patient, talking with them, I met a patient that her husband died. I don't want to say the year because I don't want to give out any identifiers, even though I'm not giving out the patient's name. Her husband died. I just sat down and talked with her. I complimented, she looks really great for her age, right? She doesn't even look that age, you know, just being there for someone. In the Hippocratic Oath, it says, warmth and sympathy may outweigh the surgeon's knife and the chemist's drug. Let me read that in full so you see. Warmth and sympathy may outweigh. We can do Hippocratic Oath. Oh, misspelled. There it is. Read that. I will remember that there is an art to medicine as well as a science, and that warmth, sympathy, and understanding may outweigh the surgeon's knife or the chemist's drug. You see, sometimes it's not clinically indicated to do a physical. Sometimes you don't really have to check the neuro exam because, or this stomach, because the patient's not complaining about it. There's no clinical indication for you to check it. But maybe, just maybe, being able to touch your patients and put a hand on them, listening for them to breathe, putting your stethoscope on them, that warmth may outweigh the surgeon's knife or the chemist's drug. I mean, it's just so beautiful. I'm in the area of my practice where I am learning the art of medicine. It is so beautiful. And then my goal is hopefully one day, all the patients that I see in the hospital with stage 3 chronic kidney disease, with hypertension, type 2 diabetes, with peripheral neuropathy where they can't feel their legs, with diabetes that affected their eyes. I hope that one day that with this invention of our stock trades, that we can be able to create an era, a generation of investors in the lower socioeconomic sector and middle income, which is rapidly evaporating, an ability to have enough money to even have the convenience to go exercise so they don't eat terrible foods, to have a life that of wealth. Because let's face it, in this country, the wealthier you are, the longer you live. The wealthier you are, the more options you have with your education, the more connections you get, the more times you get to explore this beauty of earth, the less chronic diseases you have. So my hope and my dream is that one day we'll be able to show what Warren Buffett and all of these billionaires that have taken so much money and taken so much from retail investors and literally ran this world, retail can get a fair shake on Wall Street. And maybe, just maybe, I will see less patients with peripheral neuropathy, with all of these preventable diseases that can be simply eradicated, right? So that's my goal. That's my goal. So I believe that we're doing God's work. So if it feels good. So I remember Genus, that was a big runner-up back in the day. I remember day trading Genus. It was one of those stocks that it was a gunner. I remember going it up like $8, $9. It's been a while since I've visited the stock. We would have to look at the fundamentals. Let's see. Yeah, I remember. Yeah, this is for the people that are interested. This is the time I was talking about right here. When the M2, you can literally follows the M2 money supply. So for AMC, we're going to have to take a look at just look. We would have to go in and take a look at the Discord, and I would want to look at the short interest. I want to look at smart money, dumb money. I would have to look at the data. You see the difference here when it comes to like my projections. I don't have a crystal ball. Everything I use on this Discord, and many of the I use on the Discord, or I use on the Smart Money Dumb Money Confidence Spread. So I would have to go through that same thing that I went through on other videos, where I just look at the Ortex data, smart money, dumb money, look at any dark pool, what's the max pain, and all these different types of approaches to see what's going on, right? So I don't have a cool answer for you right now. I would need to do my due diligence to give you an appropriate answer. Yeah, I don't make anything up. It always has to be from data. I don't have it. But with that, I need to make this very clear to you guys. I'm gonna try my best. I'm gonna try. I'm entering one of the hardest fields. Neurosurgery is the most grueling field ever, and it just so happens I'm doing this starting this whole thing with you guys, and that's very tough too. But I know that with your support and with God on my side, we're going to build something that is going to be used for generations, right? We're going to put God first in everything we do, and all the money that we're going to be making in the future, and we're going to make a lot. All the money we're going to make, we have to remain humble. We have to know where we started from. We have to remain humble, and we have to know that this is a gift. Learning and having the ability to even invest is a gift. Being in this country, in the United States, is a gift. We're going to be working hard each and every day, and every single day, every breath I take, it is going to be in the direction of building something for retail investors, building in something that one day I pray to my Lord that it'll be able to decrease all of your guys' probability of acquiring diabetes, heart disease, stroke, cancer. I hope that all of these social determinants of health will be eradicated by having retail investors have more money, because having 2-3 jobs, working paycheck to paycheck, all that stress, which kills you, which decreases the gaps in your telomeres, which makes you age, which destroys your immune system, allows you to get sick more often. All of this has deleterious effects on your health. And I pray in God's name that we'll be able to build the software out, and all the riches that Wall Street has, we can transcend it onto retail investors, back to the people where it matters, back to the people. Okay? So God bless each and every one of you. I love each and every one of you. Okay? God bless you.